Hi everybody, it's AJ speaking. In this video I want to talk about the surge interest that we can observe in China for Tesla's products, the Model Y, the Model 3. But also we look at the key competitors, or at least the vehicles I consider key competitors, which is the Xiaomi SU7 and the YU7. And then we also look at NIO's ES8 and NIO's Onvo L90 surge interest development. These are two vehicles that recently caused NIO's share price to rally significantly. But before we get into it, so where's this data coming from? This data is from probably China's largest auto platform that provides consumers with a large amount of quantitative data, comparison tools. So that platform is really for the savvy consumer. And that's why I consider their data particularly pertinent, since people who browse on that website probably have a higher propensity to purchase a vehicle and is much less driven, or its search interest is much less driven by just entertainment value. So with that out of the way, let's just start with the main product in China, that is the Tesla Model Y. As my research showed, this vehicle generates a lot more revenue than every other vehicle, whether it's BEV or otherwise. BEV is a battery electric vehicle. So this chart shows you the search interest on that platform. The unit here is daily engagements in millions. And please note, I cut the scale here at 1.1 million engagements, since I believe the absolute amount is not that interesting. It's really sort of the change in search interest, and especially the search interest relative to other products in the market. I should point out, this platform captures all vehicles and not only fully electric vehicles. So when we look at the data, what we can see, so in January, when the new Model Y was just launched, there was very high search interest. And then in the second quarter of this year, there was some weakening in search interest. But in recent weeks, we have seen a clear increase in search interest. This is in line with overall search interest increase observable in the market. I believe this is driven by a number of factors. Factor number one is that this time of the year is traditionally the strongest sales period in the Chinese market, and typically lasts until just before or around Christmas, so the middle or end of December. So I think this explains in part Tesla's significant increase or the search interest increase in Tesla's Model Y. So the overall level of search interest in the market has increased. And for that reason, we also have to look at how the Model Y ranks relative to all other vehicles. And this is what these numbers up here show you. It shows you the ranking, and you can see that in most considered periods, the Model Y was the #1 most searched vehicle on that platform in China. And given this highly correlates with sales ranking, I believe this data is highly pertinent and historically has been a leading indicator of Tesla's sales performance. Just like all data, this data is not perfect because it can be affected by certain news events that create certain spikes in search interest that do not relate to buying intention. However, as I pointed out, the data I'm using is not general search data, but specific auto platform search data that is highly numbers driven. The content is highly numbers driven. So I believe that kind of reduces the noise from just some news items. For example, such noisy news could be, a Tesla vehicle caught fire somewhere or something, or Elon Musk visits Shanghai or something like that, or a famous Chinese influencer posts a viral video, positive or negative, about Tesla. And next we should look at Tesla Model Y and Tesla Model 3's key competitors. And I consider the Xiaomi YU7, that's an SUV, shown in this solid blue line, and the Xiaomi SU7 shown in this dashed blue line as the key competitors. And the reason why I believe these are the key competitors, the answer for that lies in this analysis. So this analysis shows you the revenue generation on a model basis in China. You can see Tesla Model Y is by far the #1. But then when you look at, okay, who is #2, you can see this purple line here, and this is the Xiaomi SU7. And then when you look at where this this vehicle was launched, this was in April 2024, and has seen then a rapid rise, surpassed all other vehicles, including the Tesla Model 3, which is still a very strong #3. And then please note this other purple line down here. that is the Xiaomi YU7. That's the new SUV product. It just launched this summer, and it's still ramping out of a brand new factory, which is typically slower than ramping out of an old factory, I should say existing factory. And I also like to point out that this data at present is only available as of end of August. But in about 2 weeks, I will have data for September. But I do have already partial September data, and I can tell you this line significantly extends upwards. So bottom line is, we already know that the Xiaomi YU7, the SUV product, will be a very big hit in China. And since it's a SUV and not a sedan as the SU7, it will most likely exceed revenue generated by the SU7. And for that reason, it's an easy prediction that that product will likely be the key competitor to Tesla Model Y. Because when you compare these vehicles, they are very similar in many ways. Both look very good. Both have very good specs. Both have very good software. Both have a very strong brand. And the sales success of the SU7 is probably the strongest indicator that the SUV product will be doing just as well, but obviously gets the SUV bonus, because the SUV market is just much larger than the sedan market. So with that out of the way, let's go back to this search interest analysis for this product. So the solid line always shows you the SUV, and then the dashed line, the sedan products of both brands. And what you can see is that all vehicles saw an upward trend in recent weeks, which basically confirms my previous assertion that the overall search interest in the market is increasing. And again, the reason is this is just the strongest period. Tons of automakers launch new products. So there's a lot of influencer reporting and other type of reporting heating up the market during this period. And what we can see is Tesla Model Y search interest has actually now reached a high since launch earlier this year in January. The YU7 was launched right around here in May, but you can see the line extends or starts before the launch, and the reason is this product was pre-announced and all key specs were available before the real launch, and that's why this product was also included on that website. So consumers could already study the product and compare it to other products. And then when we look at the sedan products, so Xiaomi SU7 is slightly ahead of the Tesla Model 3, but you can see search interest of both vehicles has been quite similar, which is actually good news for the Model 3, since in prior periods, the Xiaomi SU7, the sedan, during most periods significantly outperformed the Model 3. And you can see this here. So keep in mind this chart starts at the beginning of this year, 2025. And when you look at the gap between the dashed blue or teal colored line, you can see, and the red dashed line for the Model 3, there has been for most periods a quite substantial gap. That gap recently narrowed. The narrowing is most likely driven by Tesla's launch of the Model 3 Plus. And the reason why this is very good news for the Model 3 is the following. If we go back to this revenue analysis, and keep in mind that here is a different scale, so we just look at the period starting 2025. When you compare the gap between the revenue generated of the SU7 and the Model 3 down here the gap between these two lines, so there was quite a bit of difference. So the Xiaomi SU7 generated quite a bit of more revenue, and this is correlates strongly with the search interest. But now we see that search interest actually came in pretty much at the same level. And please note, this data only goes to August, and the latest data in search interest goes till yesterday. And right now we are almost at the end of September. So therefore, the search interest, if the correlation holds, implies that these two lines, so the revenue for the Xiaomi SU7 and Model 3, will continue to narrow. And that would be very good news for Tesla Model 3 revenue generation. So now you might be wondering, okay, if search interest is such a great indicator of revenue generation or sales, how is it that the gap between the YU7, here the SUV product, and the Model Y is so large? Because if you look at this chart, here's Model Y revenue, it's huge, 4.6 billion, and the YU7 is just under 1 billion. Well, the answer is a very simple one. At present, the YU7 is highly production constrained. They sell everything they can make, but right now they simply can't serve all the demand, which caused deliveries to extend. If you ordered now a vehicle, you probably don't get it by the end of the first quarter. So the big picture is that This data implies that Tesla is up for a very strong finish for this year. But I'd like to point out that one of boosting factor is that China announced to end certain tax benefits for fully electric vehicles. And since the Chinese customer is in general, I would say, rather savvy, a lot of vehicle buyers will likely bring forward some demand from the first quarter into the fourth quarter to make sure they can still secure that tax benefit. And for that reason, I expect a rather significant drop in the first quarter. The first quarter typically sees a very large sequential, so compared to the fourth quarter, drop in sales. That is driven by a cold climate in China in the first quarter. And people typically don't like to buy cars when it's very cold. Sounds a bit funny, but it's the truth. And then the second factor in China that adds to that is the very important Lunar New Year holidays, which is by far the biggest social event in China. And during this, call it roughly 2 weeks period, there's also a substantial drop in vehicle sales. And that causes the first quarter to be, call it roughly 30% down over the fourth quarter. And because of the demand pull forward I just explained, the drop in Q1 2026 is likely even more pronounced. And that will likely drive very bad numbers in Q1 26 financial reporting, which will come out starting end of April 2026. And then the reporting period will extend all the way to June, because some Chinese automakers report quite late. Just like this year, we might even see some profit warnings in March. So now let's talk about NIO. So the background is that NIO share price rallied over 50% in just a couple of weeks. And that was driven by a number of news items. I think management tactically created a consistent flow of highly positive news for the stock. Used a number of proxy news outlets to disseminate this news. And I believe this was overall part of a bigger marketing plan to ensure their capital raise would one, face no problems, and secondly, achieve strong pricing. I think they were highly successful in that endeavor. And so let's look at the data. So the first vehicle that kicked off this major rally in the stock was the NIO Onvo L90. Onvo is a sub-brand of NIO. The L90 is a full-size SUV, a 6-seater, fully featured, and comes at a very competitive price that is comparable to the smaller Tesla Model Y. And you can see the search interest development since launch, or I should say since there were significant rumors or leaks spread by said NIO proxies. And you can see the peak was the L90 reaching rank number 4 in the market, which is actually not that strong, since typically what you see is, and I can show you later examples, brand new vehicles in an attractive segment, the SUV segment, typically see a spike in search interest. And that is to be expected because a launch is always accompanied by a significant increase in marketing activities. All the prepared influencer videos that were embargoed, i.e. not yet released, all hit the market at once. And then, of course, Chinese consumers that follow these popular influencers, they then start watching all these videos, and then they have some interest, and they look for more information around the vehicle, and then they go to this platform I take the data from to do more searching, and then, of course, that lifts the daily activity, and that should see a spike in search interest. Is exactly what we see in the L90, but ultimately future sales success is determined by how long a strong rating can be sustained. And what we see in the L90, there was very strong interest in the beginning, and as adjusted, which is quite common, but then very quickly interest decreased significantly, as you can see on the data, hit a rank 2021, middle of September, recovered slightly, and then started to drop again. And the latest data is as of yesterday, and that is for the 25th of September. Here the last label says 24th, but it's just an artifact of how the scale is compressed automatically by the software. But the latest data is as of yesterday, 25th of September, and that is rank 25. So as you can see, this is thus far the lowest ranking. Unfortunately, I can't show you graphically, but I've been studying this type of data for quite a while, and I don't recall a single instance where a newly launched vehicle recovered from such a low ranking back to a material ranking somewhere in the top 10 without a material refresh or all-around new model launch. So this data would imply that L90 sales likely follow a similar trajectory. Once NIO worked through the initial launch orders, the organic or fundamental demand for that vehicle probably comes in significantly lower than the sales we saw in the first initial weeks. So some of you might be thinking, but they first need to ramp the vehicle and they're probably production limited. Well, that's not entirely true in NIO's case. NIO did disclose that they pre-produced a number of vehicles and then upon launch start delivering out all these vehicles that were in inventory. So why did they do this? Why didn't they announce the vehicle earlier once production vehicles were ready? I believe this was part of a clever marketing strategy. Number one, announcing the L90 a little or meaningfully earlier, a couple of weeks earlier, made it even more stale relative to the peak model announcement period, which is right now. And then the accumulation of inventory just before launch enabled NIO to show quickly very high weekly sales numbers. And that created the illusion of a big hit in the market. And the reason why I say it's an illusion is because of the data you look at. You can clearly see that interest quickly waned. But I think this strategy worked very well for NIO because we saw the share price skyrocket. And the broader analyst community actually bought into it. They were then all chasing the share price and they started raising their price targets. But there is more. So this chart shows you the search interest for the brand new NIO ES8. So this vehicle was officially launched just a couple of days ago on September 20th. It's worth pointing out that this vehicle also failed to push the Model Y at least temporarily from the number one rank. And I will show you in a second, there's an example where a vehicle from a different brand actually managed to do that. I don't think that pushing the Model Y for 1 or 2 weeks, or 1 or 2 days, I should say, from rank number one is a big deal. But I think it is meaningful that a brand new vehicle with all the marketing buzz cannot even, at least for one day, push the Model Y from the number one most searched vehicle position. But then the much more concerning part relative to ES8 sales outlook is that this vehicle very quickly dropped to number 11 rank. And the likely reason why it dropped so quickly in ranking is probably what I said earlier. Right now we are in peak product launch period in the Chinese auto market. And there's simply so much new product coming to market that the Chinese consumer is just inundated with new choices. And I think that's the primary reason why there's so quick loss in search ranking. Now, before I let you go, I want to show an example of a vehicle that recently did manage to push the Model Y briefly from number one rank. And that's the Aito 7, or in Chinese, the Wenjie 7. That vehicle comes at a similar price to the Model Y as a large full-size SUV. Comes in a fully electric or hybrid configuration, or as it's called, a range extended electric vehicle. So Aito is a joint brand under Ceres Group and Huawei, and benefits from software that is shared under the HIMA Alliance. HIMA stands for Harmony Intelligent Mobility Alliance, which is led by Huawei. Under this alliance, Huawei supplies software and other things to not only Ceres Group to enable Aito, but also to Chery. It's used in Chery's Luxeed brand. Also, BAIC, one of the legacy Chinese automakers, gets, or as part of that alliance, it's used in the Stellato brand. Also, GAC is using it. GAC was a manufacturer for NIO. And then, just in April 2025, SAIC also joined. SAIC is also a legacy Chinese automaker, of which the origin is that it was mostly a manufacturer for VW Group and General Motors. So in summary, outlook for Tesla is very strong in China. I'm not sure whether we see a new all-time high, because that bar is quite high. But at present, I have no doubt that, or I should say, it's highly likely that the fourth quarter comes in at least at the level of the third quarter, but likely meaningfully more. So that bodes quite well for fourth quarter financials. But the flip side, of course, is sales in the fourth quarter in the United States likely will come down meaningfully compared to the third quarter because of the end of the tax credit. So the fourth quarter will see a number of pluses, but also some negatives. But big picture, as I said often before, Tesla isn't not much about autos anymore, but mostly about AI product future, and that includes autonomy and humanoids. Xiaomi also sees very strong sales potential. And in terms of NIO, I think NIO's share price got significantly ahead of itself, is currently in a bubble. And I think the first quarter will be a very tough test for NIO. So that's the end of this video. I hope this was insightful. Thank you very much for listening. See you next one. Bye.